Good evening. Uh, at the forefront, I would like to thank Elets Technomedia once again for organizing this NBFC Tech Summit, which they've been doing for some time, especially Mr. Ravi Gupta and his team. I think it's been a wonderful initiative these people have been taking to not only bring the developments in the sector but also take up the cause for the sector. And it's heartening to see the summits gaining in popularity and gaining strength as we go move ahead. And it's always been my pleasure to be associated. Friends, since it obviously it's a tech summit, and I think we've had a day long of some wonderful panel discussions. I was going through the various panels, and I think very apt topics relating to liquidity, fintechs, cyber security, frauds, and where do we see things moving ahead. So I thought today let me strike a different note and talk on a different tangent today. I think perhaps if we look at, and as as they say that it's there is always an opportunity in crisis, and every time we face some crisis we do see some new developments happening. And what if we look back, especially in the last, say, about 5 to 10 years, we've seen the entire activity of lending in India undergoing a sea change. When I say sea change, I say there's been a lot of advent of new players, primarily driven by technology. And within the traditional, what we can call the orthodox players, we've seen a lot of diversifications happening. So if we look back, we traditionally had only the banks and some NBFCs. Now, within the banking space, we've had some diversifications happening. We saw, the coming in of small finance banks. We saw coming in of of course, cooperatives have been, banks have been there for long. Rural banks have been there for long. They we used to have earlier a concept of local area banks. Now that's all changed to small finance banks. Then we have payment banks. Uh, when it comes to NBFCs, earlier we had the asset financing and the loan financing. These were all clubbed. And then we saw some new age tech built players coming in, primarily, as I said, driven by technology. So we had the P2P lenders. We had what we RBI termed as aggregators. And of course, amongst all these, we had some traditional players like the housing finance companies or the microfinance institutions, the MFIs. Now, the latest addition to this entire lending fraternity has been a very, I would say, loosely coined term, what is known as digital lenders. Now, the digital lenders, as I said, is a very loose term, and it could have a lot of ramifications, a lot of issues, and we've seen some concerns also arising out. I'm not going to touch upon that. But what I'm trying to say is that we clearly see, and I think that's primarily happening because of the need of the hour. India being such a large country, diversified country with diverse backgrounds, cultural, linguistic backgrounds, and with a large segment of population, a very large chunk of which comprises of young population. So credit is something which is in great demand always. And with the advent of technology and with having a sizable chunk of young population, obviously tech-based lending is gaining a lot of ground. Now, all these changes and all these developments clearly strengthen something which I have been saying for some time now. Now, let me add another dimension. We on the other hand, we have the traditional, or what we call the orthodox NBFCs, who've been in this business of lending for more than 80, 90, 100 years now. So the whole fraternity of NBFCs in India is very old. Now, ever since this lending has started through NBFC's channels, even till today, we've had, yes, a fantastic set of regulations, evolving set of regulations, RBI doing a great job, ably backed and supported by the government of India. But I think time has come, and perhaps it is overdue now, to have a long-term vision and a long-term policy associated with it for the sector. I think gone are the days where we could manage with this patchwork kind of a thing. That okay, some need-based something arises, or something new comes up, or there is a crisis, or there is some fraud happening, and suddenly we see everything being churned up, and you see a new set of regulations coming in. you may see a new set of classification of NBFCs, because what happens is any entity which is not a bank but is into the lending space is loosely an NBFC. So it's very difficult to actually pinpoint the typicalities, because the challenges are typical to a particular type of lending player, the opportunities are typical to a particular type of player. So unless we have a long-term vision and a long-term policy, where do we see the lending fraternity, say 5 to 10 years from now, and where do the NBFCs fit in? And within the NBFC space, as I said, it's a very large player. We have the traditional NBFCs, we have the new age fintechs coming in, and we have, as I said, what are called as quote unquote the digital lenders, who could be NBFCs if you're going by the technical RBI definition, or they could be something like what we are calling as the neobanks. So we may have a coin called as neo NBFCs, which traditionally defy the definition of RBI defined NBFCs, but for practical reasons are exactly doing the business which NBFCs are doing. So there is a strong case here to come up with a long-term vision and a long-term policy for NBFCs. I think that is where there is a greater need for a regular and a more, I would say, exhaustive dialogue happening between all the stakeholders. We cannot leave this entirely to the regulator or the government. It has to be a joint dialogue with all the stakeholders. That means the industry players, the regulators, the policy makers, the law, the legal people, and some of the professionals like the chartered accountants fraternity, accounting, based on which accounting comes, and of course the tech people, because ultimately things going ahead are going to be driven more and more by technology. So all the stakeholders, I think, need to come together and come up with a long-term vision and a long-term policy for the sector. I say this because if we have that, my sense is that a lot of challenges which the NBFC sector faces can also be addressed. For example, today I was going through, in fact, one of the sessions was also on liquidity. Now, liquidity is one issue, I think, which has been going on ever since I came in this sector, which was good 30 years back. And it continues even now. Even now, we may see this for a certain segment of players, we may see this for a certain class of players. Or it may crop up due to some event-based issues like what we saw post ILFS and DHFL defaults. We saw the liquidity issues cropping up. So we've had niggling tax-related issues. We've had some niggling accounting issues. So probably if we have a long-term vision set, it would be easier for all the regulators and the stakeholders to practically work together and come up with the solutions. So I think that is very important part. But while we do so, I would like to add a word of caution here on two fronts. One, of course, let us not be so gung-ho about the tech-based players, and in that process, if I may, pardon me for saying this, we may ignore or leave the traditional players behind, because let us understand that still the typical old age orthodox lending NBFCs, primarily which are very small and very large in number, are very much needed in the system. The need is not to ignore them, but to find out ways how to have a better collaboration between the new age tech players and also the old orthodox traditional players, because those people are very, very deep rooted in this business, in the understanding of this business. They have developed niche markets, the niche products, and have become experts in that sense. So the need is to develop, that's one challenge. Second is, when you talk of technology, of course, we need to be wary of the various challenges which technology has. As it's always said, it's a two-edged sword. And we've had issues of frauds and security coming in. I'm sure I'm not an expert on that. There is enough being talked about that. So I think that is broadly what I wanted to say, is that time has come. I think it is foremost the need of the hour to formulate a long-term vision. And in that, since even this will be an issue with the new age players, because everybody doesn't start big, everybody starts small, and we already have a very large number of small players. So if we could look at the small NBFCs as, I mean, I use the word MSMEs of the lending fraternity. Let me use it this way, because MSME is a very attractive word for the policymakers. Politically also, it sounds very correct. So if we could look at small NBFCs as the MSMEs of the lending fraternity and give them those associated benefits and facilitating environment. So that is the kind of scenario I think we need to work at as we move ahead. When we talk of regulation, while we've seen that regulations have evolved over the years and they've been changing with the changing business models, and lately we've seen RBI has come up with a proposed new regulatory framework for NBFCs where they are proposing a pyramid kind of a structure, a graded structure. So you will have a size based regulation, that if you are a small in size, the regulatory system will be lax, and as you gain in size, your regulatory system is further tightened. And as RBI prefers to use the word harmonized, so when they say harmonized, they're trying to bring the regulatory framework almost alike, akin to a banking regulation. So it's like regulating banks and NBFCs on a similar set of regulations. So of course there is again to be a word of caution here, that while doing so, as I always say, let us ensure that the typical flavor and the typical uniqueness of NBFCs should not be lost. That needs to be maintained. That has to be there. But I am pointing out here to a very practical issue which is cropped out. That while on one hand, the regulator and everybody has been talking about harmonization of the regulatory framework, on the other hand, we have a very, very strange and a peculiar system when it comes to accounting. Today, NBFCs are the only financial players in the system who are following the Ind AS accounting system. No other player follows it. Now, it's not that as NBFC players we are averse to it or we don't want to do it. We are happy following it. It's been there since 1st April 2018, and the NBFCs to whom it applies, they have been complying to all the norms and accounting as per the Ind AS accounting systems. But what it has done is that since we are the only players, often we find situations and we come across instances where the Ind AS accounting provisions come in direct conflict to the RBI norms. And there the situation becomes very typical and very, I would say, strange for NBFCs. And we are then, need to try to figure out how to go about. And this, I say this, even in the context of as late as the recent restructuring norms, which RBI announced for banks and NBFCs, where they have allowed us to restructure loans given to individuals, small businesses and MSMEs. There again, if we look at the way these restructuring norms have been prescribed relating to asset classification also, there are certain issues which have cropped up, typically for NBFCs who follow Ind AS accounting system. So I think if we are talking of harmonization on one hand, why are we bringing this kind of divergence on the other hand? So that needs to be seriously checked up. And the third most important issue, which I have always stressed upon, is that whatever regulations or whatever policies are made, we need to always keep in mind that regulation have to go hand in hand with development. So whatever is done has to be kept done with the single focus in mind, and that is the development of the sector. So I'm sure, obviously, every regulator wants the sector to develop, because unless a sector develops, there is no point of having regulation. But when I say development, I mean a slightly different context, that not only development driven through regulation, but the regulator also may be playing an extra role, going an extra mile in supporting the sector when it comes to the broad policies relating to the overall financial system, taxation, recoveries, as framed by the policymakers at the North Block or the powers, the corridors of power. So I think that is where this development have functioned, and one of the key elements to and the key ways to do it is to have a regular dialogue. Today, unfortunately, in spite of whatever we may say, not that we are not heard, we are in touch with the regulator, we are in touch with the policy makers, but it is time that there is a structured mechanism set up that both Ministry of Finance and RBI and the other regulators should have a regular meeting dialogue with the industry, just as they have it for banks. We often hear, that on a quarterly basis, banks meet the finance minister or the, RBI governor, or the people at DFS or at RBI. But there is no such system for NBFCs. So we need to have a platform where all stakeholders should do it, because I remember way back in the late 90s and early 2000, there was an informal advisory group on NBFCs which was set up by RBI, where all stakeholders used to come together and meet every quarter. And that was a very fantastic platform, but for some reasons that was done away with in I think 2006, and post that we never saw such mechanism developing. Not that RBI is not meeting. Let me add a rider here. Every time we've approached RBI, we have been given time, we have been heard patiently, and all our issues have been discussed. But still, going ahead, I think the need is to have a regular mechanism, a structure where everybody, all the stakeholders can sit together. I would also ensure and appeal that the tech players, the fintechs of the world, need to be also part of those dialogue, because technology is going to be playing a very important role going ahead. So unless we have that kind of a platform and a mechanism, the first goal, which I said, is to have a long-term vision or a policy, will not be fulfilled. So I think I'll leave it at that, keep it short and crisp, because I know everything has been discussed. It's the fag end of the day. Energies must be exhausted. So I thought I'll just give some new food for thought. Thank you for giving me this opportunity, and I'll be happy to take any feedback as if required.
Thank you, Mr. Raman Aggarwal. It's always a pleasure to have you, sir. And I would say most often you give a good start to the event, but this time you have given a perfect ending to the event. Thanks a lot for your presence. I would request my team to please bring certificate of appreciation for Mr. Raman Aggarwal on the screen. So this is NBFC Trailblazer Award for Mr. Raman Aggarwal, Director, Finance Industry Development Council. We are honored to give you this Trailblazer Award, sir, for sharing such insightful information and playing a very vital role in building up the NBFC series.
Thank you. My pleasure.
Thank you so much for your presence, sir. Thanks a lot.
Thank you.